It is 9:13 a.m. Pacific Daylight Time. It is the 10th day of June, 2025. This is episode 1122 of Bitcoin. And yeah, Bitcoin Core is making waves. Apparently, we've got a schedule for this op return limit removal. I promise you I will get into that. Bank of Japan. There's some history between Bitcoin, something called the carry trade, the Bank of Japan. It happened last summer. We may see something like that this summer around the same time. We'll have to figure it all out. We're going to do that with a story out of Cointelegraph. A strategy is shifting the way that they are performing their at the market or ATM. I promise you we will also get into that as well. And then the mayor of New York may have just he may have spoken out of turn when it came to the bit bond. Somebody is pushing back on that. If you don't know what the hell I'm talking about when it comes to the bit bond in New York and Mayor Adams, you will after today's show. And, well, the U.S. spot Bitcoin ETFs have hit apparently a record, and it's a pretty high number. It really is. Paraguay got rugged. Well, no, they didn't get rugged. It seems that their Twitter account was used to say things and reach for stuff, and Paraguay's not happy about it. We'll talk about that. And then lastly, you thought 100 million leverage long, not once, but twice, was good and funny and demonstrative of the idiocracy that occurs in markets. Well, honey, you ain't seen nothing yet. It's all coming up. First, however, we are going to start with this Bitcoin Core issue. Op return limit removal scheduled for October. Atlas 21. A group of Bitcoin Core developers has set October for the implementation of changes to the management of op return outputs. That is a field that allows small amounts of arbitrary data to be inserted into Bitcoin transactions. I'm going to pause there because this whole op return thing has completely blown everybody's wildest imaginations completely out of proportion. Right? It's like now we look at Bitcoin Core as something that is evil and is out to destroy Bitcoin and that they've been co-opted. We've heard this story before, but this time, I'm not saying that it's true. I'm just saying that this time that story is so deep-seated in people's minds that it is now, in my opinion, technically different than all the times it came before. There's been so many times that Bitcoin Core was accused of being co-opted and trying to destroy Bitcoin. It's like a song that won't go out of your head. You know, the earworm kind of song. It's like all of a sudden you have to listen to it 40 times and there's a 50-50 chance that it may actually work and get it out of your head. This time it feels different. It feels that the structure of the argumentation that is causing Bitcoin Core to look like they are 100% completely the enemy is very, very effective. Now, you'll say, but of course, David, they are. And then other people will say, but they're not. I'm trying to remain neutral. Bitcoin Core has brought us Bitcoin for the last 17 years. I'm not about to pull up stakes and move off the ranch just simply because this particular earworm is as effective as it has been. But the other side of this is, like, if you don't know what the op return debate is, op return, like it says, allows you to put in little bits of arbitrary data into a Bitcoin transaction. However, this has always been the case. Now, it's been limited, and that's what the argument is now. They want to remove the limit, and it looks like they are going to remove the limit on how much data you can shove into the op return as arbitrary data. But do remember, that the op return function and the arbitrary data return, or the arbitrary data that you could stuff into that function, is what gave us the rare Pepe, which was the very first, if I have to say the word, I have to say it so people will know, it was the very first in the original NFT, the non-fungible token. It was never called that. They were just called rare Pepes, but they were different versions of the Pepe frog, and they were shoved into the Bitcoin blockchain, and people bought them. In fact, if I remember correctly, it was the rare Pepe situation that caused the general rift to occur between two of my favorite podcasters, Jun Seth, and there's no reason in the world that I should not remember the other gentleman's name because everybody knows him, but it's escaping me right now. I know, I hear you, you're out there, you're screaming it. I can't hear you. I'm sorry, but Jun Seth and his partner, they had a great podcast. And it was the rare Pepe situation that caused that podcast to basically go away. They had a fight. It seems that they're still friends, but they just didn't see eye to eye on this particular thing and what it could be used for and whether or not you should sell them. And it was a big thing. This op return issue has been with us forever, but now it's really toxic. I'm gonna say it. It just is. It's really toxic. The only people that I can stomach listening to about this issue are people that are trying to remain as neutral as possible on this, because honestly, I know sitting on the fence sucks, but it's really the only way to figure out what in the hell is really going on. But continuing, currently, Bitcoin's core default mempool limits sets the amount of data that you can put into an op return to 83 bytes. Not kilobytes, not megabytes, not gigabytes, but bytes. We're talking like limited amounts of memory being used, or limited amounts of data being used in this op return. But the upcoming modification will increase that limit to 4 megabytes. I can understand why people are pissed. I get it. From 83 bytes to 4 megabytes per output. Some developers, including Antoine Poinsot and Peter Todd, argue for the need for greater flexibility in how the blockchain can be used. Resistance to these changes is being led by figures such as Luke Dash Jr., or Luke Dasher as he has come to be known, and Bitcoin Mechanic, who consider the expansion of the op return limit a betrayal of Bitcoin's fundamental principles. In their view, node operators should reject the storage of data unrelated to Bitcoin's financial use case. Conservatives argue that Bitcoin should not become a cloud storage service or a database for arbitrary data. The Bitcoin ledger they maintain should serve a narrow purpose, exclusively validating BTC movements for monetary use cases. The announcement of the October release date came via a post from Bitcoin Core developer Gloria Zhao, who confirmed the planned rollout for version number 30. We're at 29 now. While the default value will increase from 83 bytes to nearly 4 megabytes, node operators will still be able to manually adjust the data carrier and data carrier size parameters. However, it's widely acknowledged that most users stick with the default configuration. The controversy extends beyond purely technical matters, touching on fundamental questions about Bitcoin's identity and its future. Progressives see this evolution as necessary to keep Bitcoin competitive and versatile. Conservatives, on the other hand, fear that allowing the storage of large amounts of arbitrary data could compromise network efficiency, increase node operation costs, and steer Bitcoin away from its original mission as a decentralized digital currency. The debate has sparked tensions within the community. The technical editor of Bitcoin Magazine described conservatives as groups of people, quote, clueless, and in some cases outright malicious, and manipulative people on social media, end quote. And that would be Shinobi, by the way. On the other side, Bitcoin Mechanic called the progressives' proposed changes completely incoherent with Bitcoin's nature and objectives. Jimmy Song also criticized the decision in a post on X, stating, op return outputs greater than 83 bytes will increase significantly, UTXO bloat will keep getting worse, and there will be more garbage on chain. This is going to age like a bad tattoo. And if you've ever seen bad tattoos on somebody who's like 75 or 80 years old, you know what Jimmy Song's talking about. So which side do I come down on? I'm going to say it this way. I would rather them not do this. Now, that's what I'm going to say. I would rather that they don't increase the op return size to 4 megabytes. However, what is it that I'm really saying? What have I said in the past about Bitcoin? A valid transaction to Bitcoin is a valid transaction to Bitcoin. Bitcoin itself doesn't give a shit what's in the transaction. Does it meet the rules of being a valid transaction? If it does, then LFG, guys, let's go. If it doesn't, then it doesn't get into the mempools. It becomes an invalid transaction, and anybody running updated consensus rules, their node just basically disregards the information and it never gets mined because it's an invalid transaction. In that transaction, there are several parameters. And one of those parameters is the op return parameter. If it can be increased, it will be increased. If it can be decreased, it will be decreased. If it can be fiddled with, it will be fiddled with. If it exists, it exists. What we're talking about is in essence, is the fact that we even have an op return function in the first place, right? That's what this really boils down to. Should we even have it? If we are going to allow it to be in existence, who are we to say what size it should be? Who is Bitcoin Core to say what size it should be? Who is Luke Dasher to say what size it should be? Because really, it's not about what size op return should be. It's the fact that it exists at all. The fact that it does exist means that we're going to have to deal with the fallout of its existence. Think about it this way. Have you ever thought that your left arm is getting in your way? You'd be better off without your left arm. Have you ever thought that? Have you ever thought that maybe your big toe, you'd stop stubbing it when you get up to take a piss at night if it wasn't there and you could just, do away with it? Have you ever thought that? Of course not. I'll tell you what you have thought, though, is maybe you want to go lift weights to get your arms a little bit beefier. Huh? You're not thinking about deprecating something that's always been with you. Op return's kind of always been with us. And I'm saying all this is that this is the only way to actually look at it from a completely neutral standpoint. It's not about the argument of what the size of op return should be. It's the fact that we have it in the first place. And if we look at it from a first principle standpoint, and the real question becomes, should it even be there in the first place? Then you start to be able to have the eyeballs to be able to look at the rest of these arguments as basically saying, Bitcoin is still going to function. I'm not worried at all. People were losing their minds when people started shoving rare Pepes into the op return at 83 bytes in 2016. They were losing their minds. Nothing's changed. Everything about this really does suck. And like I said, I'd rather Bitcoin Core leave it alone. But do you know what that means for me as a full node runner? And I don't run a prune node. I run a full node of Bitcoin. Yes, it's going to probably, somebody somewhere is going to figure out a way to shove as much crap in there as they possibly can. It's gonna build up my database or my hard drive. It's gonna be shit that I would really rather not have to, care for. And I'm going to have to care for it if I want a full chain, but only if I upgrade to version 30. Because at version 30, they've taken away the ability, as far as I can tell, this is one of the things, the removal of the quote-unquote filters is also part of what's going on here. That's the data carrier and data carrier size parameters that we discussed earlier in this particular article. If those are indeed taken away in version 30, then we've got bigger problems than what the size of op return should be. And that's a lot of where this fight really, really does rest. Why people are so upset is like, look, hey, sure, you can do whatever the F you want to do with op return and its size, as long as you allow me to basically tell my node to disregard anything above 83 bytes, we're good. Well, it looks like those filters are going away. Now, if I'm wrong about that, and I may be, but for all the chatter I'm hearing is that those filters are getting taken away in version 30, then guess what I get to do? I get to not upgrade Bitcoin Core to version 30. And this is really the beauty of Bitcoin. If I was still using version 0 of Bitcoin, I would still have Bitcoin. I would still be able to make transactions. It would suck. It would not be pretty, and it would not be easy at all, but I could still do it. If I was using version 1, I could do the same thing. This is all about man in the coma. If I go to sleep for 40 years and I wake up, I will still be able to do on-chain transactions with Bitcoin that I have under my custodialship, my own custodianship, without any, with probably a headache, but I could do it, right? No matter who changed what. If they change something so hard that it becomes a complete hard fork, it is a consensus rule change, of which op return is not a consensus rule, right? 21 million Bitcoin total, that's a consensus rule. 210,000 blocks before a halving. That's a consensus rule, right? These things are consensus rules. Op return and its size is not a consensus rule. So therefore, it can be soft forked. I don't need two different versions of Bitcoin. Therefore, no matter what happens with op return, if I get hit by a gravel truck and somehow survive, but I'm in a coma for 20 years, this shit is not going to affect me. That's why I'm not freaking out about it. What's sad is to see the friendships that I've seen develop since I've been in this space since 2015 begin to dissolve. We've been here before. We'll be here again. And at one point or another, maybe, just maybe, we'll learn how to keep our shit together and not freak the fuck out all the time. But meanwhile, across the great Pacific Ocean, we have the Bank of Japan, and a pivot to quantitative easing may fuel Bitcoin rally, according to Arthur Hayes, everybody's favorite bit Mexican, and it's, 100x leverage when they were doing that kind of thing. If you don't remember Arthur Hayes and BitMEX and the troll box and the massive amounts of leverage, boy, you're missing out, man. That was fun. I never did leverage, but I did watch people lose their ass and get smoking hot rich, within minutes of making a trade. That's what 100x leverage will do. Sometimes it'll make you, but most of the time it'll take everything away from you. The Bank of Japan and their upcoming monetary policy meeting in June may provide the next significant catalyst for global risk assets like stocks and cryptocurrencies, because the BOJ is set to take its next interest rate decision at its upcoming monetary policy meeting June 16th through the 17th. The central bank may provide the next significant catalyst for Bitcoin and other risk assets if it pivots to quantitative easing, according to Arthur Hayes. Quote, if the BOJ delays quantitative tightening, or QT, and restarts selected QE at its June meeting, risk assets are going to fly, Hayes wrote in a June 10th Twitter post. It'll be interesting if it does. But on July 31st, we're going to go back to last year. July 31st, 2024, the Bank of Japan introduced a plan to cut government bond purchases by 400 billion yen per quarter starting in August of 2024. The quantitative tightening plan is set for an interim assessment period at the upcoming meeting on June 16th, signaling a potential opportunity to pivot. Bank of Japan officials are reportedly discussing making smaller reductions to the bank's bond buying from the current 400 billion to 200 billion yen per quarter, starting from April 2027, unnamed sources familiar with the matter told Bloomberg. Bitcoin rose to the 112,000 all-time high on May the 22nd, 2 days after the 30-year yield on Japanese bonds reached a new all-time high of 3.185% on May the 20th, 2025. The concerns around Japan's sovereign bond market inspired institutions to reconsider Bitcoin's role as a hedge against sovereign default risks, according to Bitwise's head of European research. Quote, perceived default risk continues rising. Yields continue rising? This is a rough benchmark of why Bitcoin could be headed towards 200,000, Dragosh told Cointelegraph, adding that Bitcoin is free from counterparty risk. Well, not exactly, but only in perception. We'll talk about that here in a second. Government bonds are typically considered safe haven assets, but when yields rise sharply, it often signals investor concerns about fiscal sustainability and repayment risks. Okay, getting back to the past, the whole July 2024 thing, that was last summer. And it triggered, when the Bank of Japan introduced this plan to cut government bond purchases, what it triggered was a sharp, oh my God, it was a sharp, steep, and immediate negative response from the Bitcoin price. And it had everything to do with this thing called the yen carry trade. Essentially, people had gotten really, really, really cheap loans in Japanese yen to go out and buy whatever risky assets they wanted. And then all of a sudden, Bank of Japan makes a bunch of changes. And it causes the yield on their loan to rise. And all of a sudden, what do they have to do to cover the loan? They got to sell off these risk assets. Bitcoin was one of those risk assets. What Arthur Hayes is saying is that this could be the reverse situation of what happened last summer. We'll have to see, because even if the Bank of Japan remains neutral and they do not raise their rates and they do not lower their rates, we will still see a negative reaction from Bitcoin, because people will collectively go, oh, no cheap money. I can't get my yen carry trade. So I just want everybody to take a deep, deep breath and just remain calm no matter what the hell happens. All right, let's move on to Strategy, or formerly MicroStrategy, shifts capital raise to preferred stocks as common share issuance loses its allure. It actually makes a lot of sense when we get into it. Over the past 2 weeks, Strategy has refrained from utilizing the at-the-market equity program on its common stock shares to fund Bitcoin purchases, choosing instead to use the programs on its 2 perpetual preferred stocks. The choice most likely reflects the narrowing premium between the company's share price and its multiple net asset value, or MNAV, more colloquially referred to as the difference between its market cap and the value of its Bitcoin holdings, and allow Strategy to raise funds to buy more Bitcoin without diluting shareholder stake in the company. That's why I'm not concerned about this. When the price trades, or when the share price trades close to the underlying Bitcoin asset value, issuing common shares via ATM becomes very much less attractive. Such offerings are typically only advantageous when executed at a meaningful premium. Strategy funded its most recent 1,045 Bitcoin purchase using proceeds from its 2 perpetual preferred stock ATMs, 59.18% from the Strike offering and 40.82% from the Strife one. These preferred stocks have demonstrated strong lifetime returns. Dude, their lifetime is not that long, guys, so be aware here. These preferred stocks have demonstrated strong lifetime returns of 35% for Strike and 24% for Strife. This gives the company greater flexibility to continue accumulating Bitcoin while preserving upside for common stock investors. There's also an additional dynamic at play, according to analyst Jeff Walton. The effective dividend yields of Strike and Strife have steadily declined from about 10%, even though the yield on benchmark U.S. 10-year Treasury have remained relatively constant at 4.5%. That's because the dividend yield falls as the price of the stock increases, a bond-like behavior that makes the preferred shares more attractive in a stable rate environment. Strategy is likely to re-engage the ATM on its common stock if the share price raises significantly, particularly if it exceeds twice the MNAV, which would allow room for dilutive issuance at a premium. While the common stock ATM remains the primary mechanism to fund dividend obligations on the preferred share, Strategy remains the option to use, or retains the option to use, the preferred stock ATMs for this exact purpose as well, depending on market conditions. So what he's saying is that Strike's common stock share, the MSTR ticker symbol for their old school share, if you wanted to buy some MicroStrategy stock or strategy stock back in the day, that's what you bought. Its share price really kind of isn't really doing anything in terms of rising. So what do? They create brand new instrumentation in the form of Strike and Strife, and they sell you that. But to get you to buy it, it needs to have a yield attached to it. That makes it very attractive. And the fact that its yield falls as its particular base price rises is still rather attractive to people. And you can sell those shares without taking value away from the people that already own MicroStrategy shares by printing more shares. That way you don't piss off your base. You can get new entrants into your market by printing these other instrumentations, and everybody's happy, right? What this is saying is that there's just no reason for Strategy to try to print up more common shares until the actual share price of those common shares rise a hell of a lot more than they already have. And as I just told you, if you look at the share price of Strategy, it's basically kind of crab walking. And a lot of that has to do with the fact that they're selling these other instrumentations, the Strike, the Stride, the Strife, and all the stuff, these new preferred stock options. People are buying into those. So therefore, they're not buying the Strategy stock, and therefore the Strategy stock is basically crab walking. It's an interesting dynamic. It really is. It's like these preferred stock things have kind of squelched the performance of its main stock or its common share stock. And how that works itself out is anybody's guess. You may need to tighten your belt. And if you don't have one, you can get one at theleathermint.com from my friend Leathermint. He makes all of his leather goods by hand. High quality leather, but better is the stitching. You can make a wallet or belts or whatever leather goods you want out of the best leather in the world. And if you can't sew them together worth a shit, then the entire product is worth absolute crap because it'll fall apart. And that's what's not going to happen with Leathermint. Leathermint makes belts, they make wallets, they make all kinds of stuff. And you can go find out exactly all the stuff they make when you go to theleathermint.com. Theleathermint.com. That's theleathermint, all one word.com. Use Bitcoin and in the coupon code for 10% off of your purchase. And that supports the circular economy because this is the Circle P. It is open for business, and it is where I get plebs just like you that have goods and services for sale to sell them to plebs just like you who might actually want a new belt. You might want a belt. You might want a belt that lasts for a long, long time. If you get one from Leathermint, it's going to last it's probably going to outlast you, and your children will be fighting over it when you're dead. I know that's really probably not the way to present this product. Sorry, Leathermint, but I'm telling you that it's going to outlast you. You can just tell by the stitching, which is done by hand, by the way. So go to theleathermint.com, get 10% off by using Bitcoin and in the coupon code, and Leathermint will throw me some Satoshis depending on how much he thought me making a sale for him was worth to him. That's the way the Circle P works. If you're not selling your goods and services for Bitcoin, you're not in the Circle P. Let's move on to the mayor of New York. New York City will not be issuing Bit bonds anytime soon, according to Frank Corva out of Bitcoin Magazine. Since 2021, Mayor Eric Adams has been talking about how he's going to make New York City the center of the crypto industry, though this hasn't materialized. So when I heard that the mayor proposed issuing Bit bonds in New York City at Bitcoin 2025, I was far from convinced that it would actually happen. And then when I read a statement from New York City Comptroller Brad Lander on the topic, it became even more clear to me that Adams was merely posturing when it came to Bit bonds. Gambling. Oh my God, there's gambling going on. I can't believe that there's gambling here. Anyway, quote, New York City will not be issuing any Bitcoin-backed bonds on my watch, said Lander in the statement. Mayor Eric Adams may be willing to bet our future on crypto in exchange for a trip to Vegas. Ooh, but my job is to ensure our city's financial stability. Cryptocurrencies are not sufficiently stable to finance our city's infrastructure, affordable housing, and schools. You do not have those. You do not have affordable housing, and your schools suck ass. So I don't know exactly what the hell you're talking about there, Lander, but hey, whatever. Quote, proposing that New York City should open its capital planning to crypto could expose our city to new risks and erode bond buyers' trust in our city, end quote. As if your city has any trust left. In the statement, Lander went on to discuss how Bit bonds would work at the federal level, before noting a key difference between federal bonds and the bonds that New York City issues. Quote, while the federal government issues bonds to fund traditional expenditures, New York City primarily issues bonds to fund capital assets, and in only very narrow circumstances can the city finance other purposes, wrote Lander. He then went on to lay out a number of other reasons why New York City will not be issuing Bit bonds anytime soon, including that, quote, New York City would have to be able to take transactions in Bitcoin in order to issue bonds backed by Bitcoin, because New York City has neither any mechanism to pay for its capital assets in any other currency beside the US dollar, nor any means to convert Bitcoin to US dollars, end quote. And this is from Frank in parentheses. If I read that correctly, Lander says that New York City doesn't know how to set up a Bitcoin wallet or trade Bitcoin for US dollars. Just about on par for an elected official in New York City. You get him, Frank. Now, pardon my cynicism here, but I am a New Yorker, a resident of one of the most restrictive jurisdictions in the world when it comes to Bitcoin and crypto, thanks to the Bit license. And there are two things you can bet on at this point in time in New York. One, Mayor Eric Adams will talk a good game about Bitcoin and crypto while not taking any action behind the scenes. And two, bureaucrats and elected officials alike in New York will continue to throw cold water on anything that challenges Wall Street's power while still claiming that New York is the financial capital of the world. Parentheses, laughable. So, Mayor Adams can make all the proposals he wants, from stages in Las Vegas to New York City-sponsored crypto summits, but until I see his administration actually do something substantial for New York City residents as it pertains to Bitcoin and crypto, I'll just assume that New York will continue to stagnate financially. So that's about exactly what I expected from this whole Bit bonds thing, and Mayor Adams as well. I'm glad that me and Frank are on the same page. Let's run the numbers. Futures and commodities. West Texas Intermediate oil is up 0.89% to 65.87. Brent North Sea up the exact same to 67.64. Natural gas down 2 2/3 point to $3.53 per thousand, and gasoline is up a half to $2.10 a gallon. All your shiny metal rocks are sucking swamp water. Gold down a third to 33.42 and 9 dimes. Silver is down a half. Platinum down a quarter. Copper is down 0.4%, and palladium is down 1 2/3. Ag seems mostly in the red today. The biggest winner is corn. 1% to the upside. Biggest loser today is chocolate, 4.5% to the downside. Meanwhile, live cattle is down 0.75 point. Lean hogs down a half. Feeder cattle are more expensive by 0.12% today. Legacy markets looking okay, I guess. Dow is up 0.25 point. S&P is up 0.4. NASDAQ is up a third, and the S&P Mini is up 0.4 as well. After a rally up to 110,500 last night, we are back down to 108,780, still a $2.16 trillion market cap, and we can get 32.4 ounces of shiny metal rocks with our 1 Bitcoin, of which there are 19,876,794.5 of. Average fees per block are 0.04 BTC, taken in fees on a per block basis. There are 10 blocks carrying 15,000 unconfirmed transactions waiting to clear at high priority rates of 5 Satoshis per VByte. Low priority is going to get you in at 4. From J6 Strikes Again, yesterday's episode of Bitcoin, and I got God's death with a row of sticks. 1,111 sat says, oh yeah. Wartime with another row of sticks. Cheers on 1111. Thank you, brother. Yodel 511 says, great cover art. That new image with the guy waving the flag on the car is about as organic as the J6 Viking. That he's referring to the cover art of yesterday's episode. I guess I should pause and tell you at least what I think about this. It's all horse shit. J6, January 6th riot was horse shit. These LA riots are all horse shit. Is property getting destroyed? Yes. Real property is being destroyed. I get it. Real shit is on fire. Real cars have been completely totaled. I get it. In both instances, shit was destroyed. But there's something about that Viking-looking guy from J6 that has always bugged me. It's too theatrical. The fact that the guards or the Capitol Police just opened the doors for all these people, I'm sorry, dude, that's suspect. There's a lot of stuff about J6 that was suspect. There's a lot of stuff about this riot in LA, which started on June the 6th. They're both J6. You get what I'm saying? And then all of a sudden, you got this fucking cholo chilling out on top of this Waymo car, the only one that's not on fire, waving a massive, bright, very clean, clearly brand new Mexican flag without his shirt on. And it's all theatrical. There's a Reuters, the picture of that I used for the cover of yesterday's episode was this Reuters picture that showed him off in the distance behind a pile of burning rubble. It's very dramatic, very theatrical, like the whole J6 shit from the Capitol. I'm tired of everybody falling for this stage play bullshit. We are only being treated at this point as an audience who demands to be entertained. This is exactly what was going on with the bread and circuses in Rome before the Visigoths started coming over the hill and sacking Rome, not once, not twice, but 3 times. Some people, I guess, will argue maybe it was even more than that. But I know of at least 3 major sackings of Rome. And right before all that shit started, the entire citizenry was just treated as if they just needed to be entertained. I do not need entertainment. I need something a lot more than entertainment. All of this, and yes, people are going to get hurt. There's going to be people that are fucking killed. When was the last time you saw an action movie that something didn't get destroyed? It was real. It may have been a car. Yes, it probably didn't have an engine in that car, nor a transmission. It was probably stripped down, but still there was something solid out there and it got freaking destroyed. I've seen movies where have you ever seen the explosion scene in Apocalypse Now? They had to do it not once but twice because the first time the entire scene got screwed because the camera wasn't on or something like that. So they had to blow shit up twice. If you think that just because something is real and gets blown up, that it means that the entire surrounding and everything connected to it is actually happening in real, and nothing else is behind it and is completely organic, then you've never been part of a movie production or a stage production or a play, or whether it's school or even if you're just doing it in your own backyard. I'm looking at this and I'm calling bullshit on all of it, especially the fact that it just happened to be the opposite of the J6. June 6th is going to infuriate the conservatives, and January 6th was supposed to infuriate the liberals. Congratulations, both sides are now completely fucking infuriated. Good job. Excellent work. Turkey with 500 says nothing. God's Death with 237 says thank you, sir. 210 from Permanerd says, can somebody please listen to this podcast and translate NunyaBidness suit speak for me? It is very difficult to translate his feelings on Bitcoin versus shitcoins, custodial versus non-custodial, etc. The only thing I got from this episode was that he wanted me to give him $100 to shine my shoes. I'll do a good job, I promise. Pies with 100. Thank you, sir. No, thank you. That's the weather report. Welcome to part 2 of the news that you can use. U.S. spot Bitcoin ETF set to hit a 1 trillion, that's trillion with a T, hit a $1 trillion cumulative trading volume milestone in less than 18 months since their launches. Oh, God, U.S. spot Bitcoin exchange traded funds are closing in on $1 trillion in cumulative trading volume less than 18 months after their debut in January of 2024. The spot Bitcoin ETFs grew swiftly following their launch, attracting $100 billion in trading volume by March 2024 and $200 billion by April of that year, as Bitcoin rose to reach what is an all-time high of nearly 74,000. However, the trading volume trajectory then slowed slightly amid a cooling-off phase for the crypto market that saw Bitcoin consolidate between 50 and 70,000 for the next 7 months. Bitcoin finally broke out of that range to reach a new all-time high following pro-crypto Donald Trump's U.S. presidential election victory in November, with the spot Bitcoin ETF surpassing $500 billion cumulative volume milestone soon after. It took a few more months for the funds to reach the $750 billion mark, and that was in February. The Bitcoin's ETF or Bitcoin ETF's cumulative trading volume now sits at $995.2 billion as of June 9th, according to the block's data dashboard, with Bitcoin once again approaching its latest all-time high of $112,000. Dude, talk about a rocket ship. I mean, I know I'm not a fan of the ETFs, just buy Bitcoin, but I can't argue with these numbers. This clearly is showing that there is interest in having this asset, even if you don't know what the asset is and you don't know how to hold it. Sort of like what Frank Corva was saying about New York City. They obviously don't know how to set up a Bitcoin wallet. I'll bet you Eric Adams and that Lander guy could run on down to Pub Key and grab a beer and a burger and talk with Frank, and in 15 minutes have a wallet set up. But, no. Because that's the thing. They'll probably think that it's so complicated that there's no possible way it could be that easy to custody money at the scale of New York City, and Bitcoin makes it just that easy. And when people finally break loose and knock that last bit of Berlin Wall in their mind over and figure that part out, whoa, Nelly. Even Paraguay will be overcome with Bitcoin FOMO, but not today. Because Paraguay says that the presidential Twitter post promising Bitcoin Reserve was merely a hack, Matt DeSalvo from Decrypt. The Paraguayan government has dismissed a post on the X account of President Santiago Peña, saying that the country had made Bitcoin legal tender as a hack. Pena's account also falsely claimed that the country had started a $5 million reserve. The tweet contained a Bitcoin address and urged would-be investors to secure your stake in the project. Oh, wow. Holy crap. I hope nobody fell for that. But the Paraguayan government in less than 1 hour later posted, quote, the president's official account on social media network X has irregular activity, which suggests possible unauthorized usage, end quote. Cyber criminals sometimes target high-profile social media accounts, yada, yada, yada. Hackers in September took over the Indian Supreme Court's YouTube channel on Friday to broadcast ads shilling the cryptocurrency cripple. And then they give a couple of other, so they don't really, that's really all that there is to the news when it comes to Paraguay. But you know what this sounds like? This sounds like somebody in the immediate presence of the group of people that are closest to the ability to post on that account. I don't think for a second and a half that this account was hacked by a third party. I think this was an inside job. Somebody who's like, man, all I need to do is get 3 Bitcoin and I can get out. I can quit my job and I can move out of the country and whatever it is they were thinking. I don't think that Paraguay was, actually a target of a hack that a lot of people are going to pour money into. I think this was inside. That's what it smells like, and that's my story, and I'm sticking with it. Do you remember, was it John Wynn or was it Jason Wynn? Wynn is the last name. We'll probably find out his first name here in a second. But remember when I was telling you about his $100 million leveraged Bitcoin long that got wiped out? And then I told you about his second $100 million leveraged long on Bitcoin and it got wiped out? Well, we don't know if this following story is about Wynn himself, but there is conjecture. But a mystery whale has opened a $300 million leveraged Bitcoin bet. Is it James Wynn? Oh, James Wynn. There we go. James Wynn alt account with a question mark? I don't know. Zoltan Vardai, tell us more. A mystery investor has opened a $300 million leveraged Bitcoin position, fueling speculation around the identity. The unknown whale, or large cryptocurrency holder, opened a 20x leveraged Bitcoin long position worth over $308 million at the entry price of $108,100, Hyperscan blockchain data shows. The position currently shows an unrealized profit of more than $4 million and faces liquidation if Bitcoin drops below $105,780. The trade has reignited speculation around James Wynn, a high-profile leverage trader who got fucking wiped out and lost nearly $25 million in a separate liquidation on June 5th, as Cointelegraph previously reported. The long position was opened hours after Wynn announced that he is back under an anonymous account without specifying the wallet address. Quote, I'm back in the casino under an alt account so the cabal market makers can't find me. Oh, bullshit. That's what he wrote. You're telegraphing again. You're doing it on purpose. You're doing this on purpose. If you really wanted nobody to know what you were doing so they couldn't wipe the floor with your ass, you wouldn't post on Twitter. It's just that easy. No, this, again, J6, I was just talking about theater, more theater. He wants eyeballs on him. For whatever reason. Is this his long? I don't know. It doesn't matter. It's the fact that we are addicted to theatrics. We are addicted to attention. We are addicted to giving other people our attention. We are addicted to getting other people to give us their attention. You're going, you've got a podcast, dickhead. Speak, irony much? I get it. Hopefully I'm bringing you something that you can use. That's the whole point. What is he bringing me? What is James Wynn bringing me by telling me that he's doing an alt account because he doesn't want anybody to know who he is, then why didn't he shut the fuck up? It's just that simple. But blockchain data platform On-Chain Lens also pointed out that Wynn may be behind this $300 million leverage long. After opening his second $100 million leveraged Bitcoin position, Wynn claimed his liquidation level is being deliberately targeted by orchestrated efforts from major market participants. Well, who wouldn't? If I can make money because I know what your position is, I'm going to do that. Again, not that hard. Quote, "They're coming for me again," wrote Wynn, disclosing his previous liquidation level in a June 2nd Twitter post. Quote, "Don't let these evil bastards liquidate me," end quote. Wynn also claimed that some of his personal accounts on cryptocurrency exchanges were closed overnight for no obvious reason, blah, 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 while the identity of this mysterious whale remains unclear. The $300 million bet coincides with a renewed wave of institutional breakthroughs for Bitcoin, according to Nexo Dispatch editor Stella Zlarodov. I can't pronounce it. Quote, "Corporate treasury activity continues to expand," she told Cointelegraph, referencing Strategy's $1 billion stock offering to fund its Bitcoin purchases, which was upsized from the pissant amount of $250 million because people actually want to buy the living crap out of it. Adding to the rising investor sentiment, spot Bitcoin exchange traded funds recorded $386 million. Yeah, they get into this other stuff. So they've stopped talking about whether or not this is James Wynn. I don't know what to think. I honestly kind of don't care. If the guy gets wiped out again at $300 million, you got to start asking yourself, how much money does this guy have to begin with that he can just continuously lose tens of millions of dollars week after week after week? Don't you want to go fishing with that money? Or open a business or help other people open businesses that you could take a part of, like as revenue stream? I mean, the fuck is wrong with these people? It's even the people that get lucky are not lucky, right? I mean, even the people that find themselves, okay, I should not say get lucky. Maybe James Wynn worked for all that money. Who knows? Maybe he did. But he's pissing it away, right? So even the people that, whether or not they get lucky, like let's say hit the lottery, right? Or they work their ass off, and they're really good at what they do. They put in 80-hour weeks for however long before it eventually kills your ass, because it will eventually kill your ass. But he's losing all that money. And the people that got lucky end up, most people that get win the lottery, they end up losing all their money, right? Because somehow or another, everybody is just infused with this desire to hand over their money to the people that really know what to do with their money. Because James Wynn clearly doesn't know what to do with his money if he's sitting all day in front of two computer screens watching charts and trying to figure out his liquidation level and begging people to help him not get liquidated by donating to the cause. What cause? What does this produce? What does this do? If he makes more money, let's say this guy does win, and let's say this guy is James Wynn, and let's say Wynn wins, and he wins all of his money back. Well, Wynn can take his winnings and figure out what to do with it. And you know what he'll do with it? He'll open another long or a short position, and he will get his ass handed to him, and all the money that he made will be gone, just pissed away. All the potential energy that is contained in that mound of cash is unrealized. It will never become kinetic energy. It's like spending all this time to roll a rock up the hill and then drilling a hole in it and putting a stick of dynamite in it, light it on fire, and watch the fucker explode, and nothing happens. You don't get to roll the rock down the hill to smash through the wall of your next dream that you want to be able to open up for you. These people have been programmed to just give their money away. It's amazing to me. It's amazing to me. I see so many people get asked, what would you do if somebody handed you $100 million right now? And half the people say, I don't know. I guess I'd go on vacation. The other, another portion, a very large portion, say dumb shit like Lambos. There are very, very few people that have a very clear vision of what they would actually do if they had $100 million. I'll tell you what my clear vision is of what not to do. I ain't going to open up leverage short and long positions on freaking BitMEX or some other bullshit platform and watch my ass get hyperventilated away from me. I don't know, man. The whole thing is theater. The whole world is a stage. We are merely actors upon it. I think that was a Shakespeare quote. And before I pontificate further, I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.